We've just gone through the inspection, we've gone back and forth, all the items are taken care of, and we're on to the next step, which is the appraisal, and a lot of people don't know what the appraisal is. What is the appraisal?
Yep. So the appraisal really is looking at two things, right? It's looking at value and health and safety hazards, okay, and if there are any on the property. Value, right, if you go under contract at $350,000, the appraisal is looking at comparable sales in the area. They're looking for about 3 to 6 comparable sales that in the last 6 months that are like kind, right? They're 3-bed, 2-bath, similar square footage, and they're making sure that what you're purchasing your home for is worth $350,000. The second item is they're looking for any health and safety hazards on the property, you know, missing railings that somebody could fall off of. And they're also looking for things like a caving in roof or mold or anything that can compromise the structure of the property. If those two things are cleared, it will come back at value and as is on the condition, then we're set and we're ready to move forward.
So we're in a hot seller's market. The market's appreciating pretty quickly. So a lot of the times we don't see a lot of low appraisals, but they do happen.
Right.
What is the scenario with a low appraisal versus a high appraisal?
Yeah, so let's go back to, you know, let's say the purchase price is $350,000. Let's say the appraisal comes in at $340,000. The bank will only lend up to that appraised value, not the purchase price. So we're only lending to $340,000. There's a few different options, right? The buyer can walk away. The buyer can make up the difference, basically putting an extra $10,000 down. The buyer and seller can meet in the middle. Let's say the seller drops the price $5,000 and the buyer pays an extra $5,000. Or the seller can drop the price to $340,000 and we move forward to closing.
Awesome. And obviously it's like Christmas when the appraisal comes in higher. What does that mean for the buyer when their appraisal comes in higher than market value?
It's really just a pat on the back.
Yeah.
And really the bank is going to lend to the lower of the two in that scenario, either the purchase price or the appraised value. So if that appraisal comes in at $360,000 and our contract price is $350,000, we're still going to lend at that $350,000, but that client now has $10,000 in equity.
What you're saying is that the appraisal is like a Kelley Blue Book valuation on a car,
right,
and the inspection is more like a Carfax kind of diagnostic test, right?
So yeah, exactly. The Carfax really gets into detail. Here's what's been wrong with the home. Here's what needs to be fixed. The Kelley Blue Book is just really explaining what other people have paid for similar cars.
Don't worry, the appraisal is super simple. It only takes into account two major things, and that is the value of the home and health and safety hazards or potential hazards. So once those are taken care of, we're on track.